whole section of questions at the end. So. Cool, we'll get started. Well, thank you very much. I'm pleased to be here. I'm excited to be here. I'm happy that Dan and Traders Log would ask me to do this. I'd like to talk about something I call "Don't Be Afraid of the Money," how a professional handles his trading capital. So let's talk about that. First I'm going to tell you a little bit about me, and then I'm going to tell you about how you should handle your trading capital, that is the capital of your trading account. We're going to talk about how a professional sizes his trades, which I think, as you're going to see, is a little bit different than what either a hobbyist or a retail person handles his trades. And then we're going to have some questions, and like I say, I'm happy to answer any questions. We'll take those at the end. So without further ado, let's get started. To tell you a little bit about me, I started out as a trader on the floor. The floor actually was at the Kansas City Board of Trade. I traded for 10 years. I started out as a neophyte trader with no chance, no clue, and no hope. And I ended up, at the end, I was a clearing member of the exchange in my own name. So I'd done reasonably well, but it wasn't a given that I was going to do well. And there was at least one point where I was probably headed out of town, but I didn't know it, and kind of came back from a pretty ugly scene. But it was a wonderful experience. I did it for 10 years. I loved it. After 10 years of trading on the floor, I didn't have to do it again. I was ready to go. And I moved to Chicago, actually. I was a member of the Chicago Mercantile Exchange through the 90s, and I was president of a company called Rand Financial Services, which some of you may know is a clearing member of all the futures exchanges in the United States. It was a great experience for me. It's the brokerage firm that was owned at the time by a Trout Trading Fund, which was the fund of Monroe Trout, which many of you may know the name Monroe Trout. So I worked for Monroe Trout through the 90s, and that was also a great experience. But toward the end of the 90s, I realized that the world was changing, and that electronic trading was not just going to be a new version of floor trading. It was going to take trading to a new and spectacular place, and I wanted to be involved in that. I didn't want to be the executive of a brokerage firm. What I wanted to do was I wanted to go back to trading. And so with a partner, we founded something called Altea Trading, and as you now know, Dan was one of our first traders, and we had offices in Chicago and in Vienna, Austria, and we had anywhere from about 16 traders to 36 or 40 traders, and it was a great experience. A great experience because with that many traders, as I was saying earlier, when somebody had an idea, it was in everybody's interest, if it was a good idea, to implement it, and if something didn't work, of course, it was also a good idea not to do it. So we had this terrific group of traders, most of whom now actually are still in trading, some of whom are pretty prominent as big traders in the market. So it was a wonderful experience. I did that for 5 years, and then I went out on my own from that, and I now mentor traders. So what I do from Lake Geneva, Wisconsin, which is a pretty cool place to be, is I train traders. And you might ask, well, how do you do that? I do it over the internet. I do it on WebEx and Skype, and I talk to people all day from all over the world on the internet. Now, it's sort of a weird thing for me in the winter, because in the winter I'm up in Lake Geneva, Wisconsin, talking to people on the internet all day, and so I only see, in the winter at least, really one other person face to face. The rest of the people I see on the computer. So I have all these computer friends that I talk to all day, and only my wife do I see during the day. So it's kind of an unusual situation, but it's been a wonderful experience for me. So that's a little bit about me. Let's get to the meat of this, and how should you handle the money in your trading account? So let's start out by talking about that. Now, I know from the conversation that many of you here are stock traders. I've got to say, starting off right at the beginning, I don't know anything about stock trading. So some of this may apply to stock trading, and some of it may not. And I leave it to you to figure out which is which. But this is how we did it in futures. So let's talk about how I opened an account. When I first started trading, I opened an account on the trading floor. The way you open an account is you went to the brokerage firm and you signed like one piece of paper and you gave them some money. The first account that I opened I think with $500. And now, I don't know how many brokerage firms we have today that are willing to open accounts for $500, but at the time, it wasn't about that. And it wasn't about how much money you had up. Now, the part I didn't tell you, of course, is that I owned a membership, and the membership had value. So it isn't like I was somebody walking in off the street that they opened the account for such a small amount of money. But the point I'm trying to make is that in this kind of environment, it was all about the money, but we weren't afraid of the money. So let me show you how we got, and the the question is, can you imagine that today? If I see from everybody smiling that it's not the norm today. You don't go in and, you know, I thought when I was giving him $500, I thought I was being fairly generous with the amount of money that I was giving him. And here I am. I intend to earn a living on this money. This is my capital. So it may seem silly, but it is, in fact, it was what we did. Let me talk about money, how we got money out of our account, because one of the points I want to make, and maybe the biggest point at this juncture, is that the problem for people today is that the money is abstract. In other words, money in your trading account is a line on an email, right? In other words, it isn't like you don't hold it, you don't see it, you don't have it in your hands. No, it's a line on a sheet of paper. Not even a sheet of paper. Actually, worse than it's not even a sheet of paper. It's on the internet. So here's how we got money out of our account on the trading floor. Has anybody had floor experience here? Anybody worked on the floor? There you go. Okay. Well, you're gonna be able to attest to this. Here's how we did it on the trading floor. This is called a chit. Now, I don't know why they called it a chit. I don't know what a chit means exactly. It's a small piece of paper. And what would happen would be you'd be trading on the floor, and there'd be a clerk from the brokerage firm that you cleared through, and he'd be walking by, and you'd motion for him, and he'd come over, and you'd say, give me a chit. And he would give you this little piece of paper, and you would write on the paper your name, your account number, the date, you'd sign it, how much money you wanted. And here's the thing I think even at the time I thought was a bit bizarre. You could choose whether you wanted cash or a check. And so what would happen would be, so I told you that I'd opened my account with $500. So let's say that it wasn't unusual that at the end of the day, at the beginning of the new day, I should say, my account would have $500 or $1,000 in it, some number like that, okay? And so I'm trading in the morning, and I make, let's say, $1,500. Okay, so now my account's like $2,500. I might get a chit, I might get, like I did here, $1,000. Okay, now, the trades haven't cleared. The brokerage firm doesn't actually know what I've done yet. But in 20 minutes, they're going to bring me a check for $1,000, and if I ask for it, they'd bring me 10 crisp $100 bills. Now, you gotta believe that that's gonna make the money real, because it isn't some abstract thing. You're actually getting it, and if you have cash, can you imagine how real that's gonna feel? And you get it on the same day that you make the money. So what does that do? That makes you understand the money. Not be afraid of it, but understand the money. There's something else that I should tell you, because this isn't all about brokerage firms giving you money. If you lost money, let's say that is my example, we start off and say I started out the day with $1,000, and let's say I lost $1,500, okay? So I start out with $1,000, I lose $1,500, my account at the end of the day is minus $500. Well, when I show up at the door of the Board of Trade in the morning, they're not going to let me in. There's actually a guard there that's going to prevent me from entering the floor. In other words, I'm going to be shut out. I'm going to be, besides not being allowed to come in, it means I can't earn a living. There's a tremendous amount of embarrassment to ever having been prevented from going on the floor. But those are the stakes. So as you can imagine, it's wonderful to get the money when you're making money, but it means you're going to have to be serious if you're losing money, because you're going to be out of business. If you lose more money than you have, they won't let you on the floor the next day. And so if I did lose the $1,500, I'd have to bring a check to the brokerage firm before the start of trading the next morning, or I couldn't get on the floor. So it makes the money serious. I've often thought that was an important equation on the floor, because you had people that understood money and trading, and that's kind of what we're going to talk about in a minute. My ideas on how you handle the money in a smart way, in a professional way, and in a way that you can earn a living from this money, which is different. You know, if we're all hobbyist traders, which you're in Chicago, I'm assuming that you're all earning your living trading. But you know, a hobbyist trader, there's somebody that they make a little bit of money, they lose a little bit of money, then they make a little, then they lose some more, and by the time it's over, they probably have lost money or not made anything. But the money isn't actually that important. They're having fun trading, I guess. But the trading that I've always done, and I'll bet that